to start with a small story. Few days ago, I met few founders. They presented me a business idea, and they have also products which are developed, and they have few customers. But where they told that when they meet the investors and explained about their product, but they didn't turn up to invest into their companies. I asked the investors, sir, why? They said the idea is good, but we didn't see much business value in it. So the point I'm trying to stress upon is just because your idea is unique doesn't mean that you will have business or you will attract investors. So the very common statement we keep listening from the founders is, sir, my idea is unique and nobody is there in the market. Nobody is there in the market is a very red flag situation. You need to convince your investor that you will have the market, you will be able to sell your product in the market. But in practical scenarios, what happens is, once they got idea, they will just register the company and they will take registrations under GST, professional tax, provident fund, and every registrations whatever possible, and they miss doing market research. So if you do market research, you should know who are your customers once you develop the product. Then if you are once your product is developed, if you are meeting your customers, you will be able to know, if you explain your product, you will be able to know the feedbacks. Based on your overall feedbacks, if it is positive, it is better to proceed further. If it is not much positive, better you need to rework on your idea. So this, if you are still proceeding further without doing any market research, you may end up the product failure, and you will end up into statutory non-compliances under various acts, whatever you are getting registered. So with this opening remarks, I am going to tell you how your pitch deck should be. Your pitch deck should be as simple as possible. For suppose you are developing a software, investors are not expected to do how coding works, how it is working on the back end, how it will appear on the screen. You are not supposed to give all such ideas, and you are not selling the software also. You are not supposed to explain the features also. So what you are supposed to tell is the outcomes, how these outcomes can be converted into business and how it can generate revenue to you. So that's what you need to present, and you need to work on as real problems, as much as real problems as possible. Many years ago, maybe 15 years ago, for booking a cab, it was very difficult. Now it became very simple with Ola and Uber. Similarly for Swiggy and Zomato, if you are working on such real problems, investor will be attracted and they will be interested to invest into your business. Second point, you need to give your market strategy. So once market strategy means, you are not supposed to tell entire Indian population will be our customers. You are not supposed to tell such statements, and you cannot do any generalized statements as well. 1% market we are going to grab, or 2% market. Instead, you need to be specific, saying, for suppose you are going to give solution for small and medium size business segment. So you may strategize a business strategy saying that first I'll be working on business segments, small and medium business segments within Hyderabad city. After 3 months, I will move to entire AP and Telangana. And after 6 months, I will target to reach entire South region. And then after 1 year, I will spread across entire India. So these may be the business strategy you have to tell. And second point, you need to talk about competition. You should not say, I don't have any competitor. As I have told in the opening remarks, if you say, I don't have any competitor, investor will step back definitely, because they are not sure whether you will be able to sell this product and you will able to generate revenues. Instead, what you should tell is how your product is different from your competitor product and how it is edge over your competitor product. And if possible, you should be able to quantify in terms of money lost, time lost, or inefficiencies you have identified, and how you are going to address those inefficiencies. Then comes the important phase, how much funding you are looking for and how you are going to spend that funding, and how it will help you to increase your revenue streams. So that you need to be very, very clear. and then you need to give 3 to 5 years projected financials. Generally, every business owner tend to overstate these numbers, and you need to give clear business model, how you are going to generate revenues, whether it is commission per transaction, or is it annual subscription, or is it any revenue, annual revenue contract with the customers. And based on this logic, you need to prepare the financial projected profit and loss account. Your revenue logic should match with this business model. For example, if you are targeting to get 1000 customers in first 1 year, and your annual subscription is 1000 per customer, your revenue should not go up more than 10 lakhs. And if you are projecting, you know that you will be able to achieve only 1000 customers, but you are projecting I will be able to achieve 10,000 customers, and you are projecting 1 crore revenue. So it will land you up into problems, because if the investor convinced with these numbers and he decided to invest, then the story begins, because you have to give periodic reports to the investor. So 10% variation from the projections is fine, but if you are achieving only 10% of the out of projections, is not acceptable. You have to, you will be held responsible, and you may have to pay back those invested amount to the investor. This is very risky situation. And one more point, once the investor decides to invest, what will be the next step? What could be the next step, you think? Do you think investor will directly invest money into your bank account? No, he will send you a list of documents for your signature. So I'll narrate a story here. Out of these documents, one document is board resolution, which says in the place of promoter director, the investor is going to be the managing director. So you are losing your authority. And one more document is share purchase agreement, which says after 3 years, you have to sell your stake to the investor, and you have to exit from the company. So your interest is lost, and your stake is lost. It is at the risk. So instead of, if you once you get the documents, you have to get expert opinion before signing those documents. If you avoid doing this, you will end up losing company, or you will end up into legal issues in the future once your company start growing. And one more important step which every pitch deck misses, exit clause. So in how many years you will give exit to your investor, and how much premium you are going to pay to your investor. These 2 points you need to mention in the pitch deck. So with this, I gave you brief idea how your pitch deck should be. If you have any questions, I can take up. Okay, thank you. Thank you for giving me this opportunity.